Hi everyone, today let's take a quick look at some news around Fed Powell's comments. Also want to talk a little bit about TLT, and then of course we'll get into all of the major charts and look for some direction over the next week to 2 weeks. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Fed Powell had his testimony this week, and he continues to hold the line on holding rates higher, while you have some other Fed members starting to come out and signal that rate cuts should be coming as early as July. You got Fed Waller coming out and saying July makes sense. Softer inflation has been what we've been seeing in the data. The PCE data was a little bit hotter than expectations. We talked about that when it happened, but a lot of the other metrics have been quite soft. And can we cut right now to potentially match some of that? Fed Powell says the economy and the jobs rate just don't seem to be signaling that we need to cut right now. So why do we care? I think this is definitely going to guide markets. If we do get that cut, maybe we see a big kind of culmination rally, which does seem to be starting right now. Does this cut come in July? That would absolutely lead us much, much higher. The other thing I wanted to talk about here was TLT. I've been talking about this forever. I feel like I've been beating the drum for months and months and months, but TLT seems to be a big contrarian bet. I do think there's a ton of opportunity here. This is a super long article and I won't bother you with all of the details. Let me know down in the comments if you want me to go through this all on a separate video, but I did want to hit some of the highlights here. The thesis is TLT has absolutely massively underperformed, deeply unloved. Nobody wants to play this kind of unsexy bet on markets when you have things like NVIDIA just rocketing to all-time highs, Microsoft continuing to be absolutely massive, but this is at a multi-decade support area with a really strong bullish divergence on the weekly chart. We've been talking about this forever. Inflation could stay high, but does that matter that much when you have the government that needs to finance their debt with potential risk for people not buying this debt as much as they used to anymore, which could drive up the cost of that debt, which could be interesting. Maybe that's what's kind of artificially suppressing bonds at current prices, but ultimately I think there is some potential here. And look at the long-term support. We've been talking about it. This is a zone of support from many decades ago. Can it hold here? Will you see a spike to the 120 to the 140 range, potentially as high as the all-time highs? I don't necessarily believe we're going back to all-time highs, but I do think we are going to go much, much higher from here. So just keep it in the back of your mind and let me know if you want the full video on this. Looking at fear and greed, we are at a 65, up from a 56. Previous number on the Thursday was the 61. So pretty steady, consistent up move through the week as we kind of expected. Neutral still here on momentum, just above these all-time highs from that previous number here. Are we going to continue through? Are we going to continue through here? Of course, that's what everyone is looking at. Breadth indicator held in there okay. It has been declining, which does indicate there is a little bit of weakness underneath this rally, but not a lot yet. Put-call ratio in greed, volatility neutral here at a 16 area, right at the trend line. We've been talking about that. Safe haven demand trending higher here in greed, and then junk bonds sitting in regular greed here as that spread has started to contract a little bit over the last couple days. Moving over to sentiment on the AAII survey here, you can see at a 35, 40, and 24, so basically unchanged from the previous week, just a little bit more bulls, pretty much in line with the historical average here on the bull side, but the bears a little bit higher, the neutrals getting squeezed right now. So a little bit of decisiveness in markets, and so far that has resulted in bullish movement. So is that going to continue? It seems to be the case over the last couple weeks that this results in some bullish weeks. So no changes here, looking for bullish off of this indicator. Moving over to seasonality here for July, you can see it is basically straight up all month, really bullish period during the July period. Slight dip early in the month, but then just after that it is all bullish, generally up 2 to 3%, really strong numbers there for July. So just keep this in the back of your mind, really bullish period here for the upcoming month. Then looking at the calendar, just keep in mind there are a lot of bullish heads on this calendar, fits with the seasonality calendar as well. Shortened trading here for the week, you do have the Monday through Thursday as normal, bullish periods for that, and then you have short trading Thursday, closed for Independence Day, and then you have a lot of bullishness the following week, up 17, down 4, up 16, down 5, up 15, down 6. So really, really strong numbers for July, one of the best trading periods to be in the markets. Summer rally, summer hype, just be aware that it can be really, really strong. And if it does not perform to those strengths, it can be a weak indicator for the rest of the year. Moving over to the economic calendar, pretty much nothing here for the Monday except for Chicago PMI, not expecting a ton out of that. CPI for the Eurozone on Tuesday. Fed Powell speaking again. Be interesting to see if he has anything new to say. Wouldn't expect it after the talks that he had the previous week, but you never know. And then we have some soft data here Tuesday, JOLTS job openings. Get the jobs numbers this week, Atlanta Fed GDP there as well. For the Wednesday, you have ADP non-farms. As expected, Eurozone unemployment rate still pretty high there to 6.2. And then for the Thursday, we do have short trading. Like I mentioned, you still have some data in here, non-farm payrolls coming in. Initial jobless claims, as always, unemployment rate coming in that day as well because of the 4th of July. So we get a ton of data on the Thursday. Might be a little bit of a choppy trading session. Usually you have less volume on these kind of half days of trading, but wouldn't shock me to see a little bit more volatility than you would generally expect from this kind of a day because of all the data that we have coming in because of that holiday on Friday. Moving over to Max Pain here, you can see there are a little bit of options in for the Thursday, not a whole lot. Max Pain is 603, so quite a bit lower than current price. Wouldn't expect that to have a ton of impact. Puts here 590, don't expect to get anywhere near that number for this week, but it's not impossible. 600 also a pretty decent put wall. 605 are already well above that. The call wall is 620, so anywhere between kind of 605 and 620 makes sense, which really only gives you about 1.5% of potential upside this week, but either way, nothing crazy here for Max Pain this week. Moving over to the charts, looking at the SPX here, you can see we are right at that trend line. We came right to it and stopped for the week, which was just above the previous highs. We talked about this last week. If we did get the push through these highs here, we would get the continuation to here, and sure enough, we did. Momentum bullish, good volume on the session. Are we going to push through and go to this next zone here in the 6,700 area? That would be absolutely bananas, and I don't really expect that to happen, but it's not impossible. We would have to push through this trend line here, and if we did, there's a lot of open space of potential upside there. Looking at the daily chart, you can see we did just barely miss it based on this structure here, but the weekly chart was touching it. You're already overbought. Good volume coming through on that daily chart. Trend line in here around 6,300 as well. That is a much longer time frame trend line here. Kind of hard to see it on the daily chart, but just understand that it is in that region. It does give you a more reasonable price target in the short term of that zone. And then looking at that daily chart here on the SPY, we do have a trend line up here around 622 or so. So a couple of trend lines to watch for. You're already bullish momentum, already overbought. Decent volume coming through here though, so we'll see. Either way, everything still looks bullish. Just a little bit of overhead resistance on that weekly chart to watch for. Moving over to the SPY charts here on the Tasty charts, you can see we are getting very close to that second ATR band. That's going to be 624.67, something to watch for in there. Do suspect that we will likely get there at this point. That's only about $20 higher from current, which means definitely within striking range for me within the week, maybe next week, considering that this is a short trading week with the Friday being closed and then half day trading on the Thursday. So maybe we have a short trading week. We don't quite get there, but I would suspect either this week or next week we will likely get there. And then looking at the daily chart, understand we are almost in those overbought conditions. We are grinding along that upper ATR band already. That is the 617.70 level, grinding through here. Momentum slightly bullish, RSI, volume, very small spike on the Friday volume, but nothing crazy, still very much bullish. Your trailing stop right now, 595.07. Moving over to the NASDAQ, very similar thesis here. We said we would get to this trend line if we could break out of this structure here, which would take us just above the all-time highs, which ended up happening here. Momentum back to bullish, RSI back to bullish, not overbought yet. If this pushes through here, we're going to have to extend out some of these trend lines to give us some intermediate targets because there is not a lot to work with on the trend structure here. That would give you a target all the way up in the kind of 24,700 range. Do I think we're going to get there? I think probably not, but you never know. It's not impossible. We are technically just above this trend line here. Is this going to be major resistance, or are we going to continue in price discovery? I think that's absolutely a possibility. And like I said, everything continues to be bullish, so you do have to play it that way. And then looking at that daily chart, structurally, we are above all the EMAs and SMAs, all-time highs on the Qs. No real levels to work with as this is price discovery. 4 straight days of bullishness above these levels here. Your support 538.28 continues to be support, momentum bullish. RSI overbought conditions there at a 71.07, but again, continues to look very nice. Moving over to the Tasty charts here, very similar setup to the SPY charts. Once again, getting close to that second ATR band. That's at 550.06 right here. We are pretty much there already, just $2 off of that level. Suspect that we'll likely get a touch there. Your upper ATR band is all the way up at 577.71. Don't think we're going to get there. It's not impossible. We've absolutely hit that on uptrends before. You can see in the structure. Absolutely gotten there. But it's taken many, many weeks, and then usually once you get there, it slows down dramatically, and you see pretty substantial pullbacks from there. So if we did get there, that would absolutely be a take profit. But for now, everything still looks pretty strong. Do we get through here and start to push a little bit more? Probably not this week. Do we push all the way to that next level? Probably not this week. Can we push through this level and rally a little bit more? I think that's absolutely a possibility. But looking at that daily chart, understand that we are pretty much at that upper band already. That is right now at 551.48. It will continue to grind higher as price goes higher, but once we do touch that level, like I said, once you hit it, usually there's a pretty decent pullback in time. You can see we got here on 14 May and we were still here on 30 May before we did kind of get this continuation through. So we'll see. Do we touch it, kind of pull back, wait for a while, and then get a continuation? Certainly possible. Moving over to the Russell here. The Russell had a great week, up 3% right to this trend line and then rejected from there towards the end of the week. Don't love to see that. Want to see it push through there if it's going to do it. But right now your support, 214.79. Can it push through here to this kind of 218 to 222 area? That would take you back into this kind of consolidation range here. We are right at this low range. Very interesting pivot point, but we had a nice rally out. And then once that broke, there was a ton of movement down. So critical zone here. Can we get through this? Continuing to watch it closely. And then looking at it here on the daily chart, you also have that 200 SMA sitting in there, which continues to be resistance. 215.68, we did close below it after testing a pretty high range. The high there on the Friday was 217.41, and then we ended up finishing below it there. Like I said, 215.68. You have this low consolidation range here as well at that 214.79 area. We did close above it, so it does look okay, but that trend line continues to be resistance. Momentum bullish, RSI kind of neutral there. Neutral to bullish. Moving over to the Tasty charts here for the Russell, you can see that ATR trailing stop right now is that 223.09 area, which is right here, right kind of in the middle of this range, just above the highs back here from August. A little bit of momentum bullish, volume a little bit bullish here, but that trailing stop is still bearish on the weekly chart, so just keep that in mind. You do have mixed signals on the Russell. Looking at that daily chart, obviously still bullish here. We've been in bullish conditions since back here on the 12th, continues to look bullish, holding above that 9 EMA as your support, which continues to sit around that 213.03 area, which is pretty tight, just a couple of dollars lower. We did pull back to that range, did bounce off of that level. Second ATR band continues to be kind of a resistance area around 216.86, but as that continues to drift higher, we should be able to go a little bit higher there. So either way, still bullish here on the Russell. Moving over to the Dow. Dow also had a massive week from this zone of support. We talked about it last week. If it could push through here, then we were going to get a really powerful week. And sure enough, we did push through this consolidation range here, held above that 426.20 level, pushed clean through the next one, 432. Your next resistance here is that 441.43 area, which is kind of the zone of resistance. This is your double top before we had this big sell-off. Do we come back in here and stall out again? Certainly a possibility, but right now momentum still bullish, RSI bullish, good volume on the week, and you would expect follow through just based off all of these indicators here. So next target 441, really all-time highs are going to be pretty close behind in my opinion. 446.50 is that kind of range to look for on the Dow. Moving over to the equal-weighted S&Ps here, you can see we did push through that level. 179.94 was the level. 182.22 is that kind of lower high setup with the high kind of lower high structure here. If we push through, then you're looking towards that next level, 184.84, and then your all-time high is in here around this kind of 188 area. That's the next zone to look for. Again, everything still looks good. Momentum bullish, RSI bullish. Are we going to get that continuation through here to those levels? Seems like we will. Moving over to the SPX divided by the Russell and the NASDAQ divided by the SPY. Here you have the SPY and the Russell basically flat here between the two of them. Momentum slightly bearish, RSI slightly bearish here, but in terms of structure, you're still in the same kind of consolidation range, waiting to see if we kind of get a breakdown here or not. I've been a little bit more bullish on the Russell, but we've been neutral really since the mid-April timeframe. So they've both been going up together, and then you got the NASDAQ starting to lead us back to the upside, headed towards that 366 area. Momentum bullish, RSI bullish. So with the NASDAQ leading us higher, that is again another bullish indicator that markets should continue to rally, despite some of the weakness that we've seen in some of the underlying stocks. Moving over to the SPY divided by the M2 money supply, the big concern here for me is the divergence between the SPY charts, right? So you have the SPY overlaid here. You can see the SPY is clean above this high from February, all-time highs here, but you have the SPX divided by the M2 money supply not making all-time highs, not making highs relative to this previous high at 28. At that 2850 level. Of course, your all-time high is all the way back at the .com bubble on this chart. I don't suspect that we're going to get anywhere near there, but on this indicator, you have clean divergence with the SPY chart making all-time highs and the M2 money supply relative to the SPY just not making a new relative high. So that is concerning. Usually for me, that means this will eventually fail. This is still bubble territory in my opinion, and I do eventually believe that this is going to come back down. But for now, everything still looks bullish. I do believe that this will go to that 2850 level and at least get a double top on this SPX divided by M2, which again gives you a bullish thesis in the short term, but in the medium to long term thesis, I believe this chart will be much lower. Moving over to the Mag 7 here on the weekly chart, you can see that level that we've been watching, 330.67 is that level. We are right at it. As we talked about through the week, this is a pivotal week, pivotal level, and we are right in that zone. You can see we have not closed above that level for any length of time. We're right here. Do we get an all-time high close on the weekly chart for the Mag 7? Certainly a possibility. Momentum bullish, RSI bullish. Even if we do get there, like I said, I do believe it will probably fail at some point and then come back down, and I think that will be quite dramatic. But again, in the short term, still looks bullish. If we get a gap and hold in continuation, should continue to see rallies here on the Mag 7. Moving over to the Apple and Microsoft charts, Apple basically unchanged, 0.04 on the week. Apple has been dead money for a long time, and I've been saying that for a long time, but does it hold this structure in here and end up getting a spike higher like we did here? Certainly a possibility. Can it break through and head back towards that 144 EMA at 181.19? Certainly a possibility as well. This overall structure is still bullish, but I think this could be sideways choppy for a long time. And then looking at Microsoft, nothing really to say here, just absolute rocket ship, just continues to go up every single week. Another really, really powerful week. New all-time highs across the board, 3.88% on the week. Moving over to NVIDIA and Tesla here. Tesla slightly positive on the week, just $1 through wicks to these highs once again, and then rejected from there. So you don't love to see that. Structurally, still like it. Still a little bit bullish here. Above all the EMAs and SMAs on the weekly chart. Momentum kind of neutral. RSI is still a little bit bullish, but you do have this kind of structure here with a high, lower high potentially forming, and then this could be a low, lower low in here potentially. So, and then spreading it out, this does look like a very consolidative stock. We got into this range back here October of 21, and we are below that high now, June of 25. So wouldn't chase anything on Tesla, at least for now. If you're selling it, I understand. If you're buying it, I kind of understand. Middle of the range, I would say the real buy range is kind of 214 to 232. Anything above this kind of $400 mark is probably a sell on Tesla. And then looking at NVIDIA, new all-time highs here. Very strong week, almost 10% on the week. Momentum bullish, RSI bullish. This is probably a better place to be. Really across the board, you got Microsoft and NVIDIA really carrying markets higher. Then moving over here to Amazon and Alphabet, both of these doing extremely well. Also, you got Amazon up 6.49%, Alphabet 6.28%. Really, really nice weeks. Amazon, of course, structurally looks a lot better, pushing through this level here, pushing through these highs. Looks like we're going to go to that 223 area. Could go back to these all-time highs here on Amazon. Continues to look good. 233 is the next target. Momentum bullish, RSI bullish. Love that. And then looking at Alphabet, not as clean here. You do have this kind of left shoulder head, right shoulder forming. This is the bullish portion of a potential right shoulder, which is concerning. But for now, still looks bullish. Still believe this is going to go kind of into this zone here between 185 and this kind of trend line area, 186, 187. I think we'll get here. Do we get a full left shoulder all the way up to this 192 area? Possibly. Either way, everything still looks bullish. Momentum bullish, RSI bullish, good volume on the week. Everything says this should go a little bit higher. Moving over to Meta and Broadcom, you got two really strong stocks here. Both of them having really powerful moves this week as well. Looks like Broadcom's going to go to this trend line here. This is all-time highs for Broadcom, 284.13, and then you got Meta also at those all-time highs once again. Really big pullback, bigger than I would have expected on Meta. Ended up pulling back about 30%, 33%, really strong, deep pullback on Meta. And then we did continue right back to these all-time highs. I don't really believe that the tariffs were ever going to affect Meta, but it was an everything sell and Meta was affected. Gave you a nice sale price here around the 490 area, and now we are back to those all-time highs at that 733 area. In terms of structure, I don't really have any because we are right at these all-time highs. You could argue maybe we go to this trend line here around the 850 area. Seems almost out of reach, but you never know. Meta's been extremely strong, and both of these really look quite good. Moving over to staples and discretionaries, you got staples basically unchanged, down just a 0.5%, right at that 55 EMA. You can see it's there at 80.47 through wicks in both directions, finished right at that level, right at this trend line here. Is this eventually going to fail and push back down into this range? Potentially. If it goes there, I would absolutely buy it. Pretty much anywhere around this 74-75 range, I think, is a nice opportunity. Do keep in mind that it could go quite a bit lower. If the 200 breaks, then you want to look for this kind of 64-65 area, which would be interesting. So like I said, 74-75 if this 200 area holds. If that area breaks, watch for 64-65. So something to keep in mind. Either way, this is still consolidation with no clear direction, and waiting for some clear direction on that one. Otherwise, discretionaries, really nice week here, up 3.75%. Tesla not driving it. Amazon definitely driving it here on discretionary. Nice move for them. Needs to get above this 219 area. If it does, we're headed back towards this 227 area, potentially back towards this recent high around 239, and that is your most recent all-time high as well. Moving over to real estate and gold. Real estate has pulled back here slightly. We're not quite into that buy it as fast as possible range, but it is on just a smidgen of a sale. Really below 40 is pretty much buy it as fast as possible. Get those yields when you can, and certainly between 35 and 37, again, just buy it. Really buy it as fast as you can. So anytime we get into this range, it has been an opportunity over the last several years, going back to 2019. Buy it in here. You had a great opportunity in here if you did get some buys. Hopefully you did. Huge volume coming through. Everyone understands that real estate is going to be fine and you can get really good yields on it. Otherwise, gold, looking at gold here, pretty interesting actually for me. This looks like a top, and then you got a big sell this week. Interesting there. Momentum bearish, RSI bearish. Is gold finally going to pull back here a little bit? Watch it. The trend is broken. You're right at VWAP at 301. We're right there, 301.04 is VWAP. Current price 301.22. 21 EMA is there a support 290. So even with that, that's a pretty decent pullback into that area. That would be about 3% lower. Not a huge move, but the bigger concern is that you pull back to this 55 EMA. That's about 13% lower. Can it do it? Absolutely. Look at this run here. We rallied super aggressive, 15% in just a couple of weeks. Wouldn't take too much for us to sell back into this range. It's been an absolutely massive run on gold. Huge rally. Since back here in October of 23, we've had a run of about 87%. Can it pull back a little bit of that? Absolutely. It's definitely overbought. You can see we got up to an RSI of 80 on gold, which is basically unheard of. So understand this kind of looks like a consolidation, a little bit of a sell potential there. Moving over to breadth, 20 and 50-day breadth held in there really nice this week. 20-day back into this kind of 60 range, back above the 50-line momentum bullish, RSI bullish. Again, under the hood, still looks good. And then looking at 50-day, same thesis here. Got above the levels, still in this consolidation range. Momentum, not great. RSI, still good. Still not breaking down below this structure. Still consolidation range. Markets can continue to rally in this zone. Moving over to 200-day breadth. We're still in this consolidation range here. Momentum bullish. RSI still bullish. We're still right at that 50 line. 200-day breadth has not recovered. The most recent high was in February back here. And even that high was made at a 60% or so on breadth. 200-day breadth has been fading since September of last year. Big sells there. We've been watching it. We said it was going to happen, and it did. Came on the back of that Liberation Day announcement, all the tariff news, but breadth has not recovered. The Mag 7's leading is higher. Acknowledge, I do understand that, and markets are certainly at all-time highs. You do have to acknowledge that as well, but market breadth is just not there. About half of the stocks are rallying above their 200-day average, and half of them are not. So is this rally going to continue? I do believe that it it. Will it be sustainable for the medium to long term? I'm just not on the bandwagon for that yet. Moving over to the dollar just continues to fall off a cliff. It's been selling here since the beginning of the year. 13 January started this sell, and we are still selling here now at the end of June. So big sells. 96.85 is still that level we've been watching for. Momentum resuming to bearish. RSI still oversold at a 29.92. Still believe we're going to touch that level. Still believe we might even go to this trend line here around 96.38. In terms of structure, this is a very long consolidation. Your peak was back here in October of 22 through wicks. Long consolidation, tried to go back to that zone, failed. Big sells here. And you can see this structure. It's been rallying a long time. The dollar's been very powerful over the last several decades. Is it going to come down and test this structure in here? I kind of believe that it will, in this kind of 95.35 area. Moving over to bonds. Bonds had great weeks here. J&K almost up 1%. Big week for J&K. Pushed through this level here. We're into this consolidation range here. We're above that 200. Pushed above it 2 weeks ago. Continuing through here. Still believe we're going to go to this 97 area. It's been a nice move. Bonds have been in a nice uptrend here over the last year or so. Had a nice pullback in here. Nice buying opportunity. Hopefully you bought some of that. We talked about it when it was in this range. And now here for TLT, same kind of thesis. Still on sale, in my opinion. Anywhere below 89 has been the buy range. Continuing to buy it here. Still believe we're going back to this 100 area. Same zone we were in December of 23, same zone September of 24. Still believe we'll get 2 cuts here from the Fed, which should push bonds even higher. And I think that's part of why we're seeing this buy up here now. Markets believe that those cuts are coming. Nothing has derailed that move yet. We haven't seen the tariffs really affect inflation. Still a possibility that that gets derailed. Do we get another buying opportunity on bonds? Potentially, but are bonds going to crater from here? I just don't see that being the case. So it's a nice safe investment, and I do believe there is a lot of upside here. Remember, TLT before this breakdown was all the way in the 170 area. Can this double from here? Not without a catastrophe, in my opinion, but can it go much, much higher from current price? Absolutely. Realistically, I believe this should be in the kind of 120 area, but that's a long-term thesis. In the short term, I believe 100 is possible. Moving over to the VIX, we are in this zone of support. We've been talking about it. We are here once again. Is this the zone where we see bounces? Potentially. Momentum is still bearish. RSI is still bearish. Does it push through here to this kind of 15 area? I think that's probably the more likely case, but understand this has been a zone of support multiple times over the last several months, and we are here once again as a potential zone of support. Moving over to my accounts, unfortunately I did lose money on the week, which is upsetting, but my Roth continues to do well. Nice. Continues to rally, trading bullish on the IWM. Probably should do more of that. I still have a covered call here on the Qs. I'm only negative really because I did have that call on, and then we did start to see that squeeze as the Iran war did hit that ceasefire, and then once the ceasefire happened, then everything was off to the races. I did get squeezed on that a little bit, but did manage to make up some of it. Obviously, these shares are in a nice profit, and then the losses on this call will continue to come in. If price kind of sits around this range, max profit there, 550. Are we going to push above that? Certainly a possibility, but I'm not too worried about it here in the short term. Either way, I'm going to sit on this covered call for a while, and I can continue to roll it out week to week if I need to. Let me know down in the comment section what you thought of FedPal's comments last week and what you think of TLT. Is it too boring? Is it an opportunity? Let me know. Otherwise, like and subscribe. If you got any value out of this video, make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.